talked about that plan non-stop while we're waiting to understand the details of what really is the United States plan. Mihika is speaking to us now about what the impact could be for India.
Yeah. Well, the first set of reciprocal tariffs are set to be announced today, April 2nd, and there are several, sectors at risk. Now, first we need to understand India and US's trade relations. US is one of India's largest trading partners, a history of over 25 years. India's exports to the US also reached $81 billion in 2024 and it accounted for 17.7% of India's total exports in FY24. And lastly, India does have a trade surplus with the US. Now, in terms of the tariff differential, we do charge more tariffs on the US. If I could just get the table there, India's tariff on US imports are, the weighted average stands at 12%, whereas the US on Indian imports is at 3%. The tariff differential comes up to 9%. Now, if the tariffs are imposed on a country level basis, at an expected tariff of 10% could lead to a potential export loss for India at $6 billion. This is 0.16% of our GDP. A 20% tariff could lead to a potential export loss of $31 billion, which is 2.1% of our GDP. So what can India do on a national-wise level to lower the impact? One is increase the oil and natural gas imports from the US. They could also increase the purchases of defense equipment and reduce tariffs on certain agricultural and food commodities. And lastly, lower tariffs on foreign EVs, for example, letting a Tesla inside the Indian market. Now, if the tariffs are exposed on a sector-wise level, there are 4 sectors that have a high tariff differential when it comes to the US. Animal products, footwear, transportation and chemicals. The tariff differential stands between 10 to 30%, the highest for animal products. But this may not mean that the value of exports is higher. So based on data of tariff differentials, export value as well as the US export value, we have the most vulnerable sectors coming into the picture. We have the seafood and the iron and steel, the nuclear reactors and machinery for the same, pharma products, gems and jewelry and electric machinery, which are the highest or most vulnerable sectors. Differential ranges from anywhere between 6% to 18%. The highest in terms of US exports stands electrical machinery, gems and jewelry and pharma products, the value between 8.9 to 12.6 billion dollars. Now, in terms of, the stocks that could be on the radar and could be impacted in the pharma space, you have something like Lupin, Dr. Reddy's, Zydus Life Sciences, Aurobindo Pharma and Cipla. In the textile space, you have Wellspin Living, Indocount, Trident, Arvind and Gokaldas Exports. And lastly, on the seafood space, you have Apex, Avanti Feeds and Waterbase. But since I've talked about, sector-wise level, we do have Somit joining us to tell us what India could do on a sector-wide basis to help.
Well, yes, there are 5 sectors that we are pointing out here today, and these are some sectors where there could be some negotiations and some settlements that could happen. Firstly, on auto ancillary, India could reduce taxes on auto imports because specifically for two-wheelers and passenger vehicle, if you look at the differential tax, it stands at around 67.5 percentage points, which means that we are charging this much percentage points higher taxes as compared to the US market, and this higher tariff could impact the higher auto ancillary exports that we are doing into the US market, which stands at close to $2.1 billion US dollars. So to settle this higher auto ancillary exports that India has been doing, there could be a reduction in auto import tax on passenger vehicle and two-wheelers. Second comes the textile and apparel segment. Now, overall, if you look at US accounts for nearly 28% of India's textile exports. So it's a very important market for India, and even with higher tariffs, India would still be a competitive market when compared to China because the tariffs on China stands at around 40%. But Indian players could lose market share to other countries like Vietnam and Bangladesh. And there's one way how we can prevent this from happening. Now, the way to mitigate this impact is India could lower the tariffs on US cotton imports, because more than half of the textile imports that we are doing from US is of cotton, US cotton, and by reducing that, the tariff differential could come down significantly. That's what the experts believe, and that is one thing that could aid the entire textile and the apparel market. Third comes the pharma sector. Now, overall pharma and pharma-related equipments imports into India from US stands at around 800 million US dollars. And if you look at the tax differential, it's just 7.6 percentage points. And experts believe that India could do away with this tax, and the entire pharma sector could actually benefit from this. Now, when it comes to the food and the related commodities, now high tariff barriers have been imposed by India to protect the domestic production and the domestic market. However, India can lower the taxes on alcohol, categories of prepared foods and beverages where tax rates are more, or differential tax rates are more than 100 percentage points. And by doing that, they could actually avoid any retaliatory traffic coming in, tariff coming in for the other food segments. So that is one thing that India can do. And lastly, when it comes to the electronics segment, here if you look at electronics is India's largest exports to the US market. In fact, over half of the electronics that we are exporting to the US market are mobile phones, and this could be the iPhone production that has recently started in India, and because of this the electronic exports to the US market has increased. Now if you look at the tariff differential, India imposes nearly 15% tariff on assembled phones, while US imposes 0% tariff. Now if US comes up with a reciprocal tariff, the cost of iPhones or cost of mobile phones in US market would actually increase. So here US could come in and give some settlement or could give some relief by not imposing tariff, given the fact that if they come up with a reciprocal tariff, it will be the US market which will be impacted the most because of this. And even if they come up with a tariff, then also the Indian market won't be impacted much, given the fact that China tariff stands at around 40%, and there is more incentive for Apple to in fact move production to India, given the fact that overall tariffs continue to remain on the lower side.
Okay, Sumit, thanks for that. Thanks for doing this for us, both Sumit and Mihika, of course, bringing you that update. And